pleased to introduce today our speaker, who is Wayne Peacock, President of the USAA Property and Casualty Insurance Group. Wayne currently serves as the immediate past chair of the San Antonio Economic Development Foundation. He has served on the executive board of the Alamo Area Council of the Big Boy Scouts of America. He's active in various industry and trade groups and co-led the mayor of San Antonio's task force on corporate recruiting. And then Fast Company named him one of the 100 most creative people in business. Well, when Wayne's not working, he's an avid reader, he's a runner and sailor. And Wayne and Jenny are the proud parents of 4 children, 2 twin girls and 2 boys, all of whom have now graduated from college, one of which got married. And now they're almost empty nesters, except the 2 girls, the twin girls, graduated from the University of Texas, and they're looking for jobs. Anybody needs some, right, ladies? They're looking for jobs, and when that happens, then they'll surely become an empty nester. Well, as a proud uncle, I now welcome Wayne Peacock as the 505th speaker to the Economic Club of Florida. Wayne.
All right, I don't know if I can follow that intro or not. We talked over the weekend. I asked Bruce to keep it short so we can editorialize here a bit. Thank you so much for being out here today and for allowing us to come talk a little bit about the USAA story. But since Bruce did a little bit of storytelling on Wayne, I thought I would just share a bit as well. But really it's more about what has inspired me to be a great executive over the years. I remember, as maybe not when I was 3, but certainly when I was 6 or 7, getting a chance to drive from Jacksonville to Tallahassee. Those were some fun drives that we did. That was before there was an I-10. So we had a lot of adventures. I think that was Highway 90 as we made our way across the state. But a couple of really compelling memories I have of Uncle Bruce's office. He had this 1960s Smith Corona mechanical adding machine. And I was fascinated by that because my dad had a slide rule, and that's what he used at work. So I felt like, okay, there's some innovation going on down here in Tallahassee. And the other thing that Bruce had that I have still today now, not the same one, but in my closet at home, is one of those electric shoe shine things with the black brush on one side and the red brush on the other side, right? So the 2 things I took away is like, you got to be able to do the math to do well in this job, and you got to look sharp, right? So I really appreciate Bruce's influence over the years. And since we're in Tallahassee, I'll take a little risk and say I also got a chance to appreciate Emmitt Smith long before he was a famous Dallas Cowboy. So go Gators! All right, as Bruce said, I was born in Florida. I started my career in Florida. It's always great to come back. I obviously live in Texas today, but we're going to come back again at some point when the career is done to live in Florida as well, again. And what I would tell you is, on Saturdays in San Antonio, as most people are talking about the Longhorns and the Aggies, we're still a Gator Seminole family because my wife went to school here in Tallahassee as well. But again, thank you so much for being out here to join us today. I want to talk a little bit about the role that insurance plays in building a healthy and vibrant economy, since this is the Economics Club of Tallahassee. And I'm going to talk a bit about the USAA story. Then I want to spend a little bit of time talking about the disruption that is going on in our industry, because I would argue, in the history of insurance, all the way back to the day that Lloyd's were insuring whaling ships, we've never seen as much change coming as we are seeing in the insurance industry today. And then thirdly, maybe talk a bit about the role insurance does play in this vibrant economy that we all share. And then lastly, I have a quick ask of everyone here in the room. But since it is one day past the 74th anniversary of D-Day, I thought it would be best to get started by thanking all the veterans in the room. So if we have veterans here, please raise your hand and let's give everyone. And then for all of you USAA members that are out there, thank you for your membership. I love feedback, so if you have opportunities for us to make it even better, I'm happy to get those either in the Q&A or maybe after the session. So please feel free to weigh in on how we are serving you. When I look up here at this photo on the left, you see a 1922 L car. And I would tell you that is the face of the history of USAA. As Bruce said, in 1922, 5 Army Air Corps officers in San Antonio couldn't get insurance from the big northeastern carriers because they were perceived to be a bad risk because they traveled so much, and some of them were trying to fly at that point in time, which was not a safe thing to do back in 1922. So the 5 of them actually got together and started their own insurance company. They created a reciprocal, so they shared in the profits and the losses of the association. And they got 20 of their Army buddies at Fort Sam Houston, and those 25 cars formed the basis for USAA back in 1922. We've come a long way, and as you look to the right, you kind of see the face of the future, which I think is so vitally important today in many, many industries, and that is about the use of data and analytics to be able to personalize and improve the customer experience and personalize and improve pricing and performance of businesses. So as much as we think about the car that we insured in the past, as we look forward at USAA, it truly is about how we use data and analytics to be able to drive the business forward. Now, Bruce talked a little bit about this. I want to start with the mission a moment because I think it's really important, at least our view of running business today. We are owned by our policyholders. So there is no distance between the folks who own the company and the folks who are served by the company. And the 33,000 employees who come to work at USAA every day are passionate about making a difference. And that difference for us is about helping military families build their financial security. And it is much bigger than auto insurance or property insurance or credit cards or banking or any of the products we sell. It really is about this emotional connection we have to doing good and serving those who put a uniform on and defended our freedom so we get a chance to live in this wonderful country that is the United States. That mission was penned in 1996. Not a single word or comma has been changed since then. It's one of those enduring rallying points. And what we like to say is whether we're at the board of directors or a frontline huddle or at an event like this today, we always start with the mission at USA because it is what drives us. From those humble beginnings, 12.5 million members today, over $30 billion worth of net worth. USA is now a Fortune 100 company in America. We are one of the best companies to work for by many experts. We have 33,000 passionate employees, and I think what's great about our association is at the end of the year we count up how much money we made, and then we give back to our policyholders. And so this past year, $1.5 billion that we returned back to the members of USAA. So it's great service every day, but an opportunity to share in how well the company performs. But we're not just insurance today. So Bruce talked a little bit about how big we are as insurance. But we are about a $70 billion retail bank. And we serve many of our members across the globe with their everyday banking needs. And we've got about $80 billion in investments or mutual funds that we hold for our members as well. So just a little bit of growth over the years. Now, we've been in Florida for a very long time, not the 96 years that USAA has been around, but 45 years. We started the big operations in Tampa, and today we have 5,000 employees that work for USAA here on the payroll in the great state of Florida. I think one of the really important things to know about our culture, and we do it nationally, we returned almost $1.2 million in philanthropic support. About a third of that came from our employees alone, giving back into the communities, and much of that last year was centered around hurricane relief because of what happened around Irma. We serve about 600,000 members here in the state. They drive about 1 million cars and 125,000 homes that we cover. So we are very invested in the state of Florida. It is a very important state to us. It's one of the largest states that we underwrite around the country. And today we've got about a 250,000 square foot building. That's one in the upper left under construction in Tampa, which will house potentially another 1,200 seats as we continue to grow our business and invest in the economy here in Florida. Now, I wanted to put this chart up because, as Bruce said, my first day was literally the day that Matthew hit. We hadn't had hurricanes in a while. Thankfully, we hadn't had them in Florida for a while either, but it's been quite a run, and there's been a lot of lessons that were learned. And where I wanted to start was just to say, on the heels of Harvey, which was impacting USAA in Texas, but also impacting USA's headquarters and our employees in Texas, Irma came right along. And for those of you who remember and were tracking, it was coming right at Tampa. So we ended up actually having to close our Tampa office for about 7 days to give our employees a chance to take care of their personal lives. So a lot of stress in our system, but we ended up serving 40,000 catastrophe claims during Irma here. And I show you this picture over on the left, which was one of our big challenges in Irma. If you remember, we weren't quite sure if it was going up the left side, the middle side, or the right side of the state, depending on which few days it was before it came. And we're bringing resources in from Virginia and Texas and elsewhere to get in and be pre-positioned and ready to help. And this is the fleet in Mississippi a couple days before it happened, just kind of waiting to find the right path through. But we were able to both fly into Miami and drive into the rest of the state. And we served from Key West to Jacksonville to Atlanta during the Irma event. But I thought since hurricane season has begun, maybe a couple of lessons that we kind of relearned and learned from our members this past year. And the first is, don't wait till they say that there's a hurricane coming to go to Publix or wherever it is that you shop, right? I remember I was in Boston when Harvey took the turn to come up, and we flew back in, and I went to Home Depot to get D batteries for my flashlights. There were no D batteries 2 days before Harvey struck. But the point behind this is get your preparation done ahead of time, because with the news and all of the information today, people are rushing to the grocery stores. But the other important lesson is take that home inventory. Spend the time to take a picture with your phone. It's pretty easy today. And get that home inventory so you know what is there. The third thing I would talk about is the opportunity to build a plan. One of the things that we learned in Irma was, should I stay or should I go, right? Everyone is having those conversations. And without a plan, it makes it a whole lot harder under stress. And for those of you who have pets, another thing to remember is get that pet plan figured out as well. So I think those are just some of the tips that we took from the early times in last year's storms that I think it's really good to remind ourselves as hurricane season comes along. So one of the things, if you're really wanting to do this well, is do a little bit of drill with your family as well, so you practice a bit, because I would argue you only play as well as you practice. So just a couple of public service announcements for us as we move into hurricane season. Now let's talk a little bit about disruption. I said the industry is moving faster than it has ever done before. If you ask me what am I worried about the most, I would tell you in the short run we're worried about cyber threats and cyber risk. And with the augment of these great devices that we have, we've also created avenues for the bad guys to be able to get in and steal information, whether it's banking information or actually, as we get connected homes, the ability to actually control what is going on in your home. But I would tell you more strategically, what we are worried about in the insurance business today is that 10 years from now, we will be irrelevant. And you might ask, well, why is that after 300 years of insurance markets around the world? And I would tell you because consumer expectations are changing, and they're changing fast. And they're not shaped by Allstate or Geico or USA. They're shaped by Amazon and Google and all of the digitally based companies that are reinventing and reimagining how consumers interact with business. And around that, cars are working on not crashing any longer. So imagine the day when cars don't crash. There's obviously not a need for auto insurance as we need it. And more, we were talking about this with a couple of groups, kids are not driving, right? I remember when I was able to get my driver's license, I couldn't wait to get out there, the first day possible and drive. But today, for those of you who have teenagers or those who are just past the teenage years, not all of them are actually interested in driving. And many companies, from auto manufacturers to technology companies, are figuring out how to do what we'll call mobility as a service or subscription services, where you actually use a car but don't actually own a car. So you just think about those changes that are underway, not just the change in consumer preference of how to do business, but the change in really the need for insurance. And then think about folks like Amazon and others who have taken other businesses out in very short order. The day they decide to get into banking or insurance, which probably isn't too long from now, there's going to be the pressure up in our industry. So we see these huge disruptive forces coming that we've got to prepare for across the industry. Now what we see are small digital companies. You may have heard of companies like Lemonade or Metro Mile who have built themselves from the ground up and are trying to be a digital direct-to-consumer without an agent, without all of the legacy infrastructure that folks like USAA would have. And then you've got companies of all manner who are looking at the cracks and crevices in the revenue stream or the expense delivery of this old, staid insurance industry going, I can do this a little better than they can and steal a bit here and take a bit there that we are facing. But I think we're also really, really focused on these big technology companies that can step into the world that we've known and been safe about for so many years. Now, on the other side, technology is helping us in a really powerful way. I've got a picture of a drone up there. We're using drone technology today to enhance our underwriting. It's a great opportunity to see what a roof looks like without actually putting an appraiser on the roof, which is both a safety benefit but also a time-saving benefit as well. And during last year's storms, we actually went into areas where you couldn't return to, and we took pictures from the air with both fixed-wing aircraft and these drones, and we settled total loss claims before our members were actually able to get back in and see their property. I remember being in Houston about 6 weeks after the storm, talking to one of our members who was just getting an apartment and getting his kids situated to go to school. There were still 4 feet of water in his house. There was no way to access where his house was, but we were able to take pictures of that from the air and then actually settle his claim and put money back in his pocket so that he could rent an apartment before everyone else did and get his kids ready to go back to school. And we are using AI, artificial intelligence, and machine learning to do really powerful things inside the value chain of traditional insurance. For example, we've got experiments going with Google today where we should be able to take a picture. Let me grab it. And with 3 to 5 photos here, be able to estimate the damage accurately to repair a car without ever having human interaction. So we have been building a model for the last 6 months or so, starting with a Toyota Camry, and just continually allowing that model to learn. And we're very close to being able to bring that to production level, where no longer would you have to have an assessor or an appraiser out to manage the assessment value. Now, here's what else is happening with AI. Our ability to price down to a precise level, going up measurably because of all of the capabilities that are available in these phones and connected homes. So just a couple of examples of how we're using the technology today to speed up the process, improve the process, or reduce the cost of the process to be able to provide insurance to our members. And then obviously weather is a big deal. It's a big deal here in Florida. And we're surrounded on 3 sides by water, and we're certainly in the path of many of the hurricanes, but we're also in the path of tornadoes and wildfires and just about every other peril that you could imagine is susceptible in the state. So one of the things I think we've got to continue to work on is how we fortify building standards, get much more clear about the risk from block to block, and use the technology to be able to limit the impact of weather. And what we saw across the country last year and here in Florida is that the stronger the building codes, the more well-built the homes are, the easier ability it is for us to kind of buffer ourselves from the tough weather challenges that we face here. So just some of the disruptive forces that I would say, in summary, are forcing us to up our game so that we continue to deliver the great service that we've done for the last 96 years. Now let's kind of pivot a bit and talk a bit about insurance and the role that it plays. I think all of us see on the news, and probably many of us have had a claim over the years, and recognize that when things go bump in the night, the insurance is there to help repair that. And what we pride ourselves on at USAA is being first there and be able to provide the emotional support as well as the financial support in very short order. This picture I show up here is from Northern California, from a neighborhood where the entire neighborhood was burned to the ground. That neighborhood had about 4 hours from the time they saw the flames coming over the hills to the east until every single home in that neighborhood was literally down to the foundation, or the steel beams in the garages were all that was left. And what we found in those situations was the ability to pay quickly matters a lot, but the ability for someone like Odom, who was in this picture, to show up and put his arm around or hug or cry with when that type of devastation happens is vitally important to the healing process. So this idea about being a financial first responder is the clearest and more regular view of insurance. But let's also think about it as the capital infuser as well, and the role that insurance plays that keeps each of us from having to maintain as big a balance in our rainy day fund to be able to pay. So here's a bump in the night, normal one that happens. But I thought a good fact to share today is that the average premium for a bodily injury coverage in America today is about $540 a year. And the average claim for bodily injury is about $17,000 a year. So if you think about that trade-off, the ability to pay $500 to protect yourself against those types of averages keeps you from having to have that type of capital tucked away. And that's just a small example. But last year, the insurance industry paid out $1.5 trillion here in the United States to be that capital infuser, if you will, which allows households and businesses to be able to operate more smoothly, knowing that if something does happen bad, that there's a backstop behind it. And then this third idea of a credit facilitator is one we probably don't think about as much, but if all of us who have a mortgage know there's a requirement that you have insurance. And what I would argue is that with insurance, backstopping the borrower's ability to repay in the event of a disaster, the availability of mortgage lending and the cost of mortgage lending is less as a result of that. And then if you translate that one step further and think about the role that insurance companies like USAA deal with every day, which is to support infrastructure and municipal development as well. So one of the largest ways that municipal governments fund their infrastructure is through bonds. And one of the largest buyer of those municipal bonds are insurance companies. So the surplus that we keep in order to pay claims is actually being redeployed into the industry and into the economy to be able to drive borrowing and to make the economy run much more smoothly. And I thought it'd be a good day to maybe back up against just the first piece to get a sense for why insurance is so important. And the reason I think that's important is because every day across America, when you turn on the TV, what you hear, depending on the market, is call, lawyer, fill in the blank, to go after what I'll say is the big bad insurance company, right, who's not treating policyholders right. And that image that insurance is actually the big bad entity as opposed to the entity or the industry that is actually supporting the economy is one that I think we have to work on breaking. So we are working very hard at USAA to be able to tell the story about the benefit and the role of insurance, but we're also working very hard every day to take care of our customers and deliver exceptional service, because we know getting that right every day is actually the best antidote to how the legal environment is responding to us. But I think it's a good reminder of what's going on here in Florida today that we wanted to hit on and touch a bit about today. And that's this idea of assignment of benefits. I presume some people in the room, or most people in the room, understand that. But in Florida today, there is a one-way process on attorney fees. And if the cost is $1 more than what the insurance company's original estimate was, attorneys can recoup 100% of their attorney fees. And that process only works one way, not two. It is one of the most difficult markets in the country as it relates to assignment of benefits. And many times consumers don't even fully appreciate that they've signed away their right to a contractor to be able to go out and sue the insurance company. So we are working diligently to try to seek reform here in Florida for that. The Florida legislature has taken up this item a number of times. The Florida legislature went into recess again this year without taking up this issue. And in counties, especially in South Florida, in Dade and Broward today, the impact of these lawsuits has, one could argue, 25 to 35, and by some estimates, almost a 50% premium on the cost of insurance because of lawsuit litigation costs. I think back in 2006, there were 405 AOB lawsuits filed here in the state of Texas. Anyone want to guess how many there were last year? 28,600 last year, just to put that in perspective. And we would argue that many of those are unfounded. So I wanted to maybe kind of, since this is the Economics Club of Florida, leave you with those stats today, but maybe a chance as you're talking to your legislatures members next time around to remind them that creating a healthy insurance market is vitally important for the economy. And I think for all of us who have homes here in Florida, you get and understand that the cost of homeowners insurance is expensive. I would tell you it is almost twice as much as the national average. Some of that is because of the weather and because of the natural conditions here. Some of that is because of the environment that is here legally in the state of Florida. So what's happening is we are working on this delicate balance of affordability of insurance and the availability of insurance. And today, almost no national carriers write homeowners in the state of Florida because of these reasons. USAA is one that has stuck with it. We've had our ups and downs over the years, but we are committed to military families, and we're committed to our members here in the state of Florida. And in 2017, for the first time since 2007, we actually increased the size of our homeowners book in the state of Florida as we're working both legislatively and with our underwriting and technology to be able to open up the markets for more and more. But there's this delicate balance that we've got to work on, together here in Florida to ensure that carriers want to be in this market and at the same time protect consumers and ensure that there are affordable rates. So I wanted to leave you with those thoughts, and then I said I would close today with our special ask. There are 1.5 million veterans here in Florida today. There are 20 major military installations, and this is a state that has a significant relationship with and dependency on the DoD, almost an $80 billion economic impact from DoD direct spending and supported spending in the state of Florida. We are intently focused on veterans issues at USAA, way past just providing financial services and products. And what I would tell you is still today there are 33,000 veterans here in the state of Florida who do not have a job. And half of the veterans who get a job leaving the military change jobs within the first 12 months. So we think there's still a big role for business to play in spite of this improving economy to hire vets and to build programs inside your companies to be able to support and onboard and create career pathing for veterans. In Tampa next week, we'll have a big open house for veterans to look at our claims business in that market. And then in August, we'll start one of our next cohorts that we call Combat the Claims, where we are really bringing in an entire cohort of recently departed senior non-commissioned officers and allowing them to learn the claims business together as a cohort and then become part of the USAA team. Inside of the USA community, we have over 3,000 veterans today who are part of our VetNet community, which is basically a self-managed group. And their sole purpose in life is to help our employees who aren't veterans understand the military experience, and then to help new employees who are veterans get onboarded and be successful in the USA environment. So just a kind of a plea or a request, if you are not supporting veterans hirings today, to please do that. About 25% of our new hires today are veterans, and we're committed as part of USA's value prop to continue to support those folks going forward. So with that, I will say thank you very much. Just close with our commitment to being a big part of this Florida economy, our commitment to continue to serve veterans here in Florida, and know that as much as I talk about AOB, USAA is focused on prudent regulation. We want appropriate consumer protection, but we're also very interested in creating healthy markets, so carriers like us want to continue to do business here in the state of Florida. So happy to answer any of your questions.